Insider trading. This has pretty much been a hot topic in the United States since, well, Martha Stewart and her salad got locked up for making some illegal trades. But in all seriousness, insider trading is not a laughing matter, and it really has been a problem since we have had the stock market. So if insider trading has been a problem for decades now, why is SEC Chair Gary Gensler just now talking about regulating what corporations, CEOs, and public officials can do on the stock market? Well, because right now, things are starting to hit the spotlight and insider trading is becoming a problem for both politicians and CEOs. So today I want to react to this article that talks about how Gary Gensler wants stronger insider trading rules as executive stock sales start to hit new records in the United States. I'm also going to talk about why insider trading is such a problem and what this could mean for the future of the stock market. But before I get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. So according to this article by CNBC, the CEOs of Microsoft, Amazon, and Tesla all sold around $69 billion in stock just in 2021. That is a new record, and it kind of brings up a problem because if you noticed, Amazon, Microsoft, and Tesla are some of the biggest stocks on Wall Street. And typically, most of those CEOs gather a lot of their wealth by holding stock in their company. For instance, Amazon's Jeff Bezos is worth around $200 billion, but Jeff Bezos doesn't have $200 billion just lying around. Most of his wealth is in assets like Amazon stock. You can probably guess a conflict of interest in that though. Because Jeff Bezos owns Amazon stock, he can sell that stock and buy that stock whenever he wants to. And he also has some information about how Amazon is doing. So if Amazon is going to have a bad quarter, Jeff Bezos can sell millions of shares in Amazon. He can take a lot of those profits without a problem. That is sort of riding the line of what insider trading is. Essentially, insider trading is making a trade based on insider information from a company. So let's say you held a share of Amazon, but you were told from Amazon executives that in about 2 weeks, they were going to be dropping a brand new product. And this brand new product is going to be huge. Now, knowing this, the stock price is probably going to go up when Amazon launches that product. So what you do is go out and buy 1,000 more shares of Amazon, and all of a sudden, you become very rich. You immediately sell those shares because you know this stock boom isn't going to last long, and now you run away with the profit. That is a very oversimplification about how insider trading works. But as you can see, CEOs of companies that also buy their own stock are kind of working in the same way. So here is exactly what Gary Gensler, the chair of the SEC, wants when it comes to CEOs trading stock. Gary Gensler wants the SEC to consider enacting a 120-day cooling off period for company officers and directors for any new or changed portfolio management plans. A similar amendment would introduce a 30-day cooling period for companies that trade their own stock. So here's what that means. Let's say you are a company executive like Elon Musk. If you're Elon Musk and you want to sell off 1,000 shares of Tesla so you can get some quick cash, you can do that whenever you want to. However, you also have to wait a certain period of time after buying those shares in order to sell them. However, the opposite is also true here. If you sell your stock at a certain time, you then have to wait a certain period in order to buy more of your own stock. Now, I don't know if this is going to completely stop all of this potential insider trading from company CEOs, but it would at least slow it down temporarily. And at the bare minimum, it will help the SEC to figure out what exactly is insider trading and what is not. Because if you institute rules like this, then you can essentially track when CEOs are selling and buying their own company's stock. And you can figure out and track that with what kind of big announcements are coming out around those stock sales. And like I said, that could slow down Wall Street and these big company CEOs. However, what exactly do we do with our political figures? Earlier this year, 2 Federal Reserve presidents got some major heat after they were accused of insider trading. The president of the Federal Reserve in Boston and the president of the Federal Reserve in Dallas both ended up resigning because of the accusations. Now, what essentially happened was both of them ended up making some pretty massive trades in companies right after the Federal Reserve Chairman Jerome Powell had some impromptu meetings. The trades were made just before Jerome Powell had the impromptu meetings, which looked a little bit sketchy to the SEC. In addition, as the Federal Reserve was making monetary policies and putting money into the stock market with quantitative easing measures, these two Fed presidents were buying assets on Wall Street, some of the same assets and bonds that the Federal Reserve was buying. They ended up making millions of dollars from these investments, and word finally got out in October of 2021. Now, to be fair, Federal Reserve Chairman Jerome Powell says that all of these transactions that they made on the stock market were all reported. So he essentially knew everything that was going on. When a Federal Reserve president makes a stock transaction, they have to report that to the Federal Reserve. And he says that there was really no wrongdoing here. But at the same time, these two Fed officials ended up dropping their positions. They ended up going into retirement over the moves. This prompted Fed Chairman Jerome Powell to ban stock trading amongst all of its members. So if you are an executive at the Federal Reserve, you can no longer hold assets other than things like an ETF or an index fund. An ETF and an index fund is essentially a group of different stocks, and you basically buy a share of an ETF. So that way you can't exactly trade the individual companies in that ETF. You're only trading your share in the group of stocks. That hopes to eliminate some of this insider trading that we were seeing with the Federal Reserve. But there is also one other problem with potential insider trading: our politicians that work in the government. I saw an article from Insider here that talks about, as the pandemic raged, at least 75 lawmakers bought and sold stock in companies that make COVID-19 vaccines, treatments, and tests. So specifically, they were buying Pfizer and Moderna and Johnson & Johnson. And they were making trades of these companies as these companies were starting to make a lot of these vaccines, which can appear pretty problematic because our federal government is actively working on deals with a lot of these companies to start making and producing vaccines. So as the government is giving these companies billions of dollars, that means that their stock price is going to go up because there is a sudden demand for these companies. And politicians know that they have a vote on whether this happens or not. So they're going to continue to put money into those stocks because it brings them money. So if this is something that's so obvious, there might be insider trading here, then why haven't these politicians and CEOs been investigated for insider trading? Well, because the fact of the matter is, insider trading is complicated, and it's hard to really get a concrete case on someone that is potentially insider trading. In the United States, the stock market is supposed to be a free market, meaning anyone in any occupation is allowed to invest in stocks and trade stocks whenever they want. This includes politicians, and that means that politicians, even though they are directly influencing the law, technically can still invest in stocks on Wall Street. And it really comes down to the definition of somebody that works in government. Technically speaking, government officials are supposed to be for the people, and they're supposed to make decisions based on public opinion and what their constituents want. This means that they are a public servant, and they have to make decisions that are for the people and that better society as a whole. So in 2020, we obviously had a raging pandemic, and one of the ways that a lot of experts believed we would get out of that pandemic was through vaccines. Now, vaccines have to be made by these private companies. The federal government does not have a pharmaceutical arm that is powerful enough to create these vaccines, so we rely on private industries. We've done this before in wars and in crises before. So it is a strange situation because the United States government and our politicians want to help the American people by offering these vaccines, which means they have to give money to the pharmaceutical giants in order to produce all of these medications. So in their opinion, they are doing what is right for the American people. However, they are also an American citizen, and they have every right just to go out and invest their money like everyone else. And they also have the right to be a smart investor and put their money into rising stocks like Moderna, Pfizer, and Johnson & Johnson. And the question really becomes, is this really insider information? I mean, everything that politicians do, from bills to actually passing acts in Congress, all of that information is public. You can literally go on C-SPAN, which is totally free, and watch a lot of these deliberations and see exactly what our politicians are doing in government. So with that being said, there is no hidden information. Everything from their meetings to passing bills is usually pretty public and very heavily televised. So the argument here is that there's really nothing stopping you from watching and listening to what Congress does and then going out and investing in Moderna, Pfizer, and Johnson & Johnson. If you can do the exact same thing and all of the information is public, is that really insider trading? Do they really have insider information that nobody really knows about? That is where things get really complicated. And honestly, I don't really know the answer here. And like most things, I think the answer is going to vary depending on the situation. Let's look at the CEOs, for instance. With the CEOs, a lot of these earnings reports are reported every single quarter. However, the information that is provided is not usually shown to the public until that earnings report. That means that companies like Amazon and Tesla are keeping all of this information private until they report their earnings. The earnings reports detail everything potential investors and current investors need to know about the stock, and it can make a stock rise or make a stock tank. In addition, a lot of company secrets like new vehicles, just thinking about Tesla for a second, or technology, that's all not going to be announced to the public because they want to keep all of that secret. They don't want the competition knowing what they're working on, and they want to keep it secret until it is ready for public consumption. If they were to give out that information early, well, that could hurt their business. And they're not really sure what numbers are going to be, so if they gave you weekly earnings reports instead of quarterly, things could fluctuate very fast, which would make just about every stock very volatile. But at the same time, it is still true that these CEOs and company executives have insider information that public, everyday retail investors don't really know about. So they can make a much better decision when buying their own stock than somebody that is an average investor can do. The same thing with the Federal Reserve. The Federal Reserve has quarterly and sometimes annual meetings, which means they give you all of the information about inflation and monetary policies at those meetings. They don't really say anything in between, and sometimes Jerome Powell will have impromptu meetings where he has to talk to Congress about something very pressing on our economy. The public is not usually aware of those meetings, and they're not usually aware of what is going to happen with monetary policies. So it's a little bit different when Fed presidents start investing in stocks like that. They do have that kind of secret information that only they would know, and the things that they do has a drastic effect on our economy and the stock market. So in short, this is a very interesting situation and a long time debate, and I'm not sure if we're going to have a definitive answer to what exactly is insider trading, but it looks like SEC Chairman Gary Gensler is trying to figure out and define that a little bit better. It's a weird situation, and the United States government and the SEC have to be very careful because they also don't want to constrict people way too much. That would kind of defeat the purpose of our free market. By being too active in our markets, they basically take that freedom away from the people, and that is going to hurt the stock market in general, which would hurt businesses as a whole. And right now, this is all just proposed plans. Nothing has been changed for politicians or CEOs on Wall Street. But I wouldn't be surprised if these rules start to change over the next few years. But enough about what I think. What are your thoughts on this issue? Do you think that there is insider trading with CEOs and politicians? Or do you think the stock market is a completely free market and anyone, including CEOs and our politicians on Capitol Hill, can invest as much or as little as they want? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.